afternoon, good evening, good morning, no matter where you are in this fine land of ours. I want you to know how pleased I am that you've taken time out of your schedule to join us today. And it's an exciting one today. Why is it exciting? Well, let me share it with you. At Welch, we have a variety of webinar series. You may be familiar with our managing partner, Michael Birch, and his Welsh Expert series that we get a regular listenership to. This is the start of a brand new series to complement that. And this one is the Demystifying for Business Owners series. You are listening to the inaugural episode of many to come. So we were having some jokes around this earlier around, if for those of you who are fans of the show Mythbusters, I believe they've been on the air 14 years, give or take, on the Discovery Channel. They just announced that they were coming to the end of the run of the show. They were going to retire it on a high note. And so it just made perfect sense that we would pick up that baton and carry on the whole myth-busting theme. So welcome to the show. My name's Daryl Prale, folks. I'm going to be your host today and the one who actually takes all your questions, gives you the feedback, make sure our panelists are giving you the information you need, get you in, get you out on time, and that we deliver upon the promise we made when you register to join today's show. So that's me. That's my role. Let me tell you how this process works if you've never joined a Welsh webinar before. And if you have, then you know the drill, and you can sit back, relax, and have a drink of water. It's really straightforward. You're on mute, so we cannot hear any noises from your end. So you can have the dog barking, the coworkers talking. You can do whatever you want to, and you're good. You're not interrupting anybody. You can multitask. You can type loud. It's still all good. But you can hear us, so that's good. We get asked a lot, is this recorded? Can I get a copy of it? And the answer is yes, this is recorded. And within a week, max, you will have a copy of this in your inbox, including a link that you can share with anybody you think should hear this in an on-demand fashion. So that way, if you have coworkers, peers, whatnot, put it out there for them to see it. Forward that email. Or take the link, go on LinkedIn, go on Twitter, and show them how smart you are and that you have this leading edge content and you are a mover and a shaker. So that's what you will do with that. But even though you're on mute, you can still engage with us. So how do you do that? Straightforward. You'll notice when you logged in, you probably have what we call a control panel in your upper right-hand corner. So whether you're on a Windows or a Mac, that's the way it goes. If you're on a tablet, slightly different interface, but the premise is still the same. You'll have a section called questions, exactly as you see here. And you can type in your question for our experts, and they will get it. And we will answer your question at the end of today's session. So you got to stay tuned to get the answers you want. But hey, it's free advice. Can't beat that. Similarly, though, if you don't have a question, but you have a comment, you have an analogy, you have a story you want to share, use the same process. Also, if you're incurring any technical difficulties, it's hard to hear a certain speaker, or you're having some challenges, send it to us that way, and we do our best on our end to coach you through it. So that's how you do it. If you don't want to do that because you're a modern, hip, happening person and you've got your favorite social media Twitter client there, then send us a tweet instead. Just make sure you reference #Welsh Demystify, exactly as you see in front of you. And that, ladies and gentlemen, are the ground rules. All right. I mentioned it's a brand new series. Well, just like we have Adam and Jamie on the Mythbusters, in this series we have Ryan and Pierre. They will be your two guests. The question is who, if you know the Mythbusters, and we actually have a slide come up on that to show you right away. I'm going to introduce them to you right now, but I want you to take note while I do that of their email addresses and their website. But anytime you get a chance, check them out. And if there's a question you want to ask, and you don't want to ask publicly though, then you can use their email just to ask them directly. And we'll bring this contact information back up when we're in Q&A period if you don't get it now. With further ado, let's talk about who these people are. Ryan Dostie has over 20 years of experience in public accounting. He leads the retail and service industry group here at Welch LLP. In addition, Ryan serves a number of other industries, including construction, automotive, independent contractors, NPOs, and high tech. Ryan has been with Welch since 1995 after graduating from the University of Ottawa with a Bachelor of Commerce. He obtained his Chartered Accountant designation in 1996 and his Certified Financial Planner designation in 2002. In February 2011, Ryan earned the title of partner with the firm. Ryan, welcome to the show.
Thank you, Daryl.
And the other half of the equation is Pierre Bernier. Let's meet him. He has worked in the financial services industry since 1991. My quick math says Pierre is older than Ryan. Just putting that out there. He holds the Certified Financial Planner, the Personal Financial Planner, and the Financial Management Advisor designations. He has also completed the Canadian Securities course, the Wealth Management Techniques course, and the Conduct and Practices Handbook course, all through the Canadian Services Institute. Pierre, welcome to the show.
Thanks, Daryl. And I just want to comment that most people say I look younger, though.
Well, looking at Ryan's here, I think you're onto something there. All right, so let's get this show going. Ryan, what are we covering off today?
Well, really, Daryl, I wanted to get into why, how we came up with this concept. The concept of demystifying was we really want to look at help business owners sort of really better understand various aspects of their financial situation, how proper planning can really lead to financial success, business success.
Exactly. And so the concept was really born when Ryan and I kind of realized that this social media platform is a great gateway to help the business owner. Oftentimes we've done seminars after seminars after seminars, and guess what? The business owners very rarely show up. It's really because they're time starved. I mean, they really have to focus on their business and don't have the time to devote to these type of initiatives. So I think it's a great way for us to get the message out and to get people on the right track.
That's great. What we're going to cover today, Daryl, well, we have a bunch of things coming up here. Number one, and most important, the ultimate myth. We're going to be looking at what is a financial plan. Why do you need a financial plan? The various components of the financial plan, looking at implementation and revisions, and of course we'll save some time to do some questions and answers at the end of this webinar.
All right. So with that, that's what we're going to cover off today. You've got my attention already because you talk about the ultimate myth. So, and again, setting the stage because this is our first episode in the series. The analogy, again, is to Mythbusters. And the Mythbusters is always that myth that they're out to bust. Pro, con, truthful, not truthful. But you've gone one step further. This is not just any old myth. This is the ultimate myth. What are you getting at here?
The ultimate myth in financial planning. Really, this is the key question that I think we're, as financial advisors, that you would agree, Pierre, that I'd say not only financial advisors, how about financial experts, I should say, financial individuals that have, we're talking relatives that, think that we have some financial knowledge would like to ask us as well. And, they really come to us to help confirm or demystify the ultimate myth surrounding financial planning. And Daryl, I think you can, there it is. I can retire comfortably with $1 million, right? And, Pierre, didn't you, I think it was even last week, we were talking and you basically told me a story of how this came to be.
Yeah, exactly, Ryan. I mean, I was at a family function and one of my siblings had come up to me and said, she unfortunately recently had a separation. And so she's on her own right now and she's wanting to make sure that now that there's, just her to rely upon, she wants to make sure that she has enough to retire comfortably. And so she kind of threw out this number at me and it kind of struck a chord. And I said, well, it's not just as easy as throwing a couple of numbers into a calculator here. I mean, that I can't justify it by saying this is, you're okay, take care of yourself, no problems. So bottom line is what this kind of evolved. So,
I mean, it sounds like she needs a financial plan, though.
Hey,
what
a concept.
That's right, exactly.
And that's what we're here to talk about today.
All right, so then let me ask the question: what is a financial plan?
You know what Daryl, we decided that we'd go to the most authoritative voice on the internet.
Wikipedia?
I was going to say Google, but we had to Google it. But yeah, Wikipedia. So, according to Wikipedia, in general usage, a financial plan is a comprehensive evaluation of an individual's current and future financial state by using currently known variables to predict future cash flows, asset values, and withdrawal plans. Pretty not complex.
Wow, that's a mouthful. I mean, the way I see it is, at the end of the day, financial plan should really be your roadmap. I mean, think of any time you've ever taken a long distance road trip somewhere. And, everyone knows it's always better to have either GPS on board.
Are you sure about that? I don't know about you, but the GPS has sent me all sorts of places that I shouldn't be going.
You're right. But not, you know what? The GPS never talks back. It just says recalculating. So, but ultimately, if you don't trust the GPS, then obviously, and some of us old timers, you're talking about having a roadmap, right? Handy in the car, so it gets you from point A to point B with the least amount of trouble, and in the fastest and most efficient way possible. Your financial plan really should be no different.
No, that's a great point.
So then let me ask the question. I know you've made the declaration of what it is, but the real question I guess I might ask is, can I just punch those numbers into the calculator? Why do I actually need a financial plan?
Well, I guess for starters is that you really have to know where you stand. I mean,
okay, I'm looking at this picture, Pierre, and this guy looks like he's standing in water, but
he looks like he can walk on water even. Right. Knowing where you stand. I mean, at the end of the day, what we're talking about here is that, there's several pots of money when we're talking about a business owner. There's the corporate assets, there's the personal assets, there's the RSPs or the RIFs, tax-free savings accounts. There's lots to deal with. And so it's quite easy for business owners to lose track of things. And so this is a basic starting point of really accumulating all of this information together to start with. Following that, you're looking at, how realistic is this plan? We put out some goals and assumptions, but ultimately, are they realistic? And that's what the plan is designed to do. The plan is designed to test these so you don't make mistakes in the future.
So are you saying, Pierre, that my dream of retiring tomorrow in Tahiti might be not realistic?
Yeah, I would say let's hold off on that one. Don't quit.
Okay.
Don't quit your day job.
I will unpack my suitcase tonight.
There you go. I mean, the third is really, so many times I've encountered clients who have an investment portfolio and they're ripping their hair out when the markets are volatile and so on and so forth. So many times when we go through this process with them, we're able to kind of work backwards from there and determine maybe the portfolio shouldn't be as risky as it really is, and so that's what the financial plan can actually help us do. It really helps us to work backwards from there, determine what rate of return do we need to achieve for you to meet your retirement or estate planning goals.
I mean, the risks related to investments, I think in the last few years have been, really prominent, especially in the financial crunch. And I think that's a great point that you're making, is that people sort of, whether they trust, I find there's certain people that trust the stock market and people that don't. And I think that people need to understand a bit better, what's involved and really look at the overall picture to get a good grasp of what the risks are involved.
Absolutely. Every step of the way.
Now, my favorite topic, or one of my favorite topics, is taxation and minimizing taxation. I'm not talking today. I'm talking about tomorrow and the next day. When we look at taxation, we really want to gauge at what are you currently, what is your current state? We're talking about your business. Where does it stand, and what sort of complexities it has with the different components you have, whether you have an estate set up or you have a trust, set up, and really topics that relate to the deductions that you're taking and the direction you're taking and whether the structure is proper. And into the future, really looking at, yes, your current income is at a certain level. I mean, your taxation rate might change because your income is going to drop. So a lot of that has to be accounted for. So we're really looking to minimize taxation using plans to decrease your tax now and definitely when you retire, so that you have more to work on and a better chance to get to Tahiti, I suppose.
Yeah, exactly. And I know that I've worked closely with Welch on a number of clients in the past, and you guys are doing a great job with helping business owners, succeed from their business. But I think what's more important sometimes down the road, what we want to focus in on is, it's great to have a good exit plan for the business, but we also need to have a great exit plan for life.
So you're really saying the exit strategy for life is not just that, I'm done. Good luck, everybody.
Absolutely, and it's kind of funny. I had one client who kind of said, I thought life was complicated. Well, dying is even more complicated. So there's a lot of tax laws. There's a lot of taxation that we have to focus in on going forward. So that's why it's so key. Nobody wants to think of that day, but ultimately you need to plan for it.
But I guess in the ensuring succession, we are, when we're looking at the marketplace today, the baby boomers are, aging. We're looking at, clients. I have lots of clients now that have transitioned or are looking to transition their business, and whether that's to their children or potentially selling the business, because really the opportunities to pass it along to the next generation is not there, is big decisions that need to be made. And I think by having a financial plan, you're really putting that in the forefront so that it's not I think you really nailed it, Pierre, before. It's like people don't want to talk about this stuff. Like they don't want to talk about it. But with the financial plan, you know what? We are putting it in your face. You need to make some decisions that will, yes, affect the future and potentially now, but you really need to be making those decisions so that your business will succeed and move forward. And without that, it could be troublesome.
Absolutely.
Now, did you, Pierre? I can't remember if you touched on the, we were talking about protecting of assets and legacy, and the asset part of it. Really comes down to insurance planning. And whether that is life insurance or even we call it personal insurance, making sure that we hit.
Yeah, actually, that's a good point, Ryan. I think that pretty much leads into our next slide, which is really talking about the components of a financial plan.
Before we get to that, let me just remind our audience that as Ryan and Pierre are reviewing the facts here, kind of laying out the foundation. It's an open forum. You can ask them any question you want to. So if the question is, but Ryan, I really do want to retire in Tahiti, how can I do that? Then send us those questions. And again, reminder, just use your questions in the control panel or on Twitter with #WelchDemystify. I'm sorry, Pierre, you were talking about the components of a financial plan.
Yeah, thanks, Daryl. So, first off, we're talking about, cash flow and income sources. That's going to be certainly key. When we talk about those type of things, we're really looking at, I mentioned it before, several pots of money here. And so we want to make sure that we understand from the perspective of how is each of these pots taxed at the end of the day, and how do we look at drawing from those at retirement and what have you. The second would be on the investment side. Again, I'll reiterate the fact that I review a lot of different portfolios for clients, and oftentimes come to the notion that it's either way too conservative or it's way too aggressive. So that's, it's always good to have that famous second opinion in terms of looking at things.
Isn't that a Scotiabank?
That would be a Scotiabank plug.
Do I get scene points too?
All right. I'll get off the bandwagon, but needless to say that the investments is really crucial. That's really the motor that's going to drive this vehicle into retirement. So going on that same theme of the roadmap and the journey, bottom line is it comes down to making sure that your investments are reflective of what your current situation is today, and that's going to change in the future, and so should your investments.
Now I touched on taxation before, but again, it's one of the, I think we would agree. Everybody uses that terminology. Cash flow is king, Well, if taxation isn't the queen, and we'll let the audience decide who actually controls the household in those two fronts. But taxation is really the very important aspect. I mean, that was one of the big topics during the last election, is the taxation of various individuals. So, looking at tax strategies. Now, I think this is a good point through the election. We only can make, and I guess that will come up later when we talk about implementation, but we can only guess what the tax rates are going to be currently based on the current government, but things can change dramatically depending on what's happening in the economy and what's happening on the political front. When we look at the taxation, I want to reiterate the taxation is a component that we kind of look on the individual side. So what are you doing now? A lot of our clients have children, and whether they're using up all the deductions through childcare, through sports activities, arts activities. Are we looking at, are the older individuals where income splitting would come into effect? We would be looking at minimization strategies that to make sure that, a lot of people get very upset when they lose their old age security. So we're looking at ways and strategies to minimize the effect on that. I mean, a lot of times with business owners, they have business assets they're going to be drawing income from. So we do have some control, and that's part of the plan, is we do have some control of when that income is distributed through the corporation and into the hands of the shareholders and to the individual. So there is ways to look at that. Also, on the taxation side, we're looking at, income splitting, various estates in the sense of setting up trusts, and we really want to look at various ways that we can really minimize the taxation now and enhance the benefit into the future. But what Pierre, what kind of clients, when we talk about taxation, what do your clients, what are their main issues that they have? You're creating these financial plans, so
Yeah,
what assumptions and what kind of things do you think about?
well, a lot of it has to do with, shifting money out of the corporation into the personal name. And how do you do that? This is where these type of plans, they can actually test drive the theory or test drive the myth, if you will, and ahead of time, so that you can actually see, scenario A, this is how you're doing it right now versus scenario B. And then from there, you can determine, is it going to add value by doing these type of strategies, or is it not? Or if it ain't broke, we're not going to try to fix this. I think that's number one. I think it's important that everybody wants to know that when they do finally head for retirement or are in retirement, that regardless of what the markets are doing and so on and so forth, what is that going to mean to them? And the financial plan really helps give you that peace of mind.
Wonderful.
Yeah, so, other areas that we'll focus in on, and this doesn't pertain to every one of the clients that we work with, but some clients have an education goal for their children. Others, really have want to set aside some money for emergency purposes, and that's usually about 3 to 6 months of income that would be just, available to them should they need, to draw upon them. With the markets being where they are, and with everyone else, in this situation, we do want to have that contingency plan.
So, I didn't want to interrupt you there, but going back to the education part of it, we have the great RESPs right now, which is a great plan that the government has introduced. And I think the other goes back to sort of planning and looking at, for clients about, bringing their children into the corporation, whether through share ownership or actually them doing some good days work for some money. But I think the introducing them into using sort of the corporation as a funnel to help pay for the education, because let's face realities, it's not getting any cheaper. And I know you got a couple of kids and I have 3,
Absolutely. You're right. You're bang on there, Ryan. Ultimately, and that's sometimes it's just in the world, worst way of saying this is sometimes it's just a lack of education by our clients. They just don't know a lot of these strategies exist, and that's what this type of a plan kind of helps flush out and really brings it to the forefront for them.
Now, in the emergency side, I mean, we always hear stories, and I mean, interest rates are low. People are, there's been lots of talk. I guess more in the U.S., and this will be quite interesting. And what happens in the U.S. is that the interest rates are looking to rise. I was at an economic summit for the city of Ottawa, and this weekend, they were keen on the economy in Ottawa or in Canada the interest rates were going to stay the same, but they're also going to be looking at in the U.S. the rates are going to rise. So the effect on all these people, with the mortgages and the interest rate, in Canada we have the same situation. So looking at it, we say emergencies there, but I'm thinking about things that they might not have contemplated that could change and have a direct impact on their cash flow.
Yeah, absolutely. Heading into estate planning, once again, it's really just ensuring that your wealth gets transferred to your beneficiaries, to your loved ones, or to a great cause, and in the most tax-effective method. I always say to clients, when you review your will, ultimately, there's this one member that's not really included on there, which is sometimes the government, and the government's going to get a good share of that unless proper planning is done. So these is how we can actually flesh out some strategies to mitigate the tax side of things when we're transferring wealth from either one generation to the other or to some great causes that exist.
I have good client examples. I've had some clients in the last couple of years make some good decisions on, sort of contributing some of their wealth into some universities, into some other organizations. And currently there is some very good benefit through capital gains using some tax strategies by donating shares. And these folks have used that strategy quite well by sort of passing along that, those shares to those universities or these charities and not paying tax on it. And it's a great idea and a great plan, and they get a chance to see it while they're alive, what they've done.
Absolutely. And what it ends up ending up doing is that sometimes when we know what the tax liability is, and we just, there's not much we can do to kind of erase that, it's always nice to know that we can actually control this to a certain degree and maybe, divert the funds to charitable causes, so that at the end of the day, if it's got to go, why not have control over where it's going to? And so it can really make a good difference in the community, in a lot of great causes.
I know we touched briefly about this before, about insurance needs, but we didn't really get into it. I mean, the insurance component, I think, it's married up to sometimes estate planning. It is,
and this is, I was going to say, this is really a segment that we could probably spend a whole session on. And in fact...
You mean we're going to demystify estate planning and insurance?
And insurance,
okay,
exactly.
We have two more topics coming up, Daryl.
So those are...
Make sure you put that on the list.
It's on the list.
Yeah, there we go. So... I don't want to spend too much time on insurance, but I'll say, kind of finish off on this slide by saying, philanthropy is a great way to plan, and it's just that most of the clients that I approach with it, at the end of the day, they just don't know how to do it, and they have all these great wishes and thoughts and what have you, but sadly enough, a lot of times it never happens because they just don't know how to do it. And this is where the plan comes into play.
Now, I don't know if you're a politician, but I don't think you answered my question, Pierre.
Okay, go for it.
Back to the insurance. We're looking at the insurance needs of people. And we didn't really touch on what that meant. I think, at least in my mind, and I know you guys have experts in your office, and I think that's going to be one of our demystifying series will be the next one, is insurance. But So we'll briefly touch on it today because we'll leave one of your experts to help us demystify that next time. But one of the big things I look at when we're looking at insurance needs is, I think we're talking just before this about buying out the partner.
Oh, good.
What if
Yeah.
the partner, something happens to the partner, how is the other partner going to pay out their estate or their family? Because they might not want them involved in the business, so
No,
they
you're
want to pay
absolutely
them
right.
out.
You're absolutely right. And this is really, it's something that shouldn't be overlooked.
Daryl, can I get that on record that I'm absolutely right?
It's on the record, and it's going to be online forever.
Okay.
Recorded.
Thank you, and thank you.
Thank you. You're absolutely right. I mean, at the end of the day, what we're talking about is, meeting with a lot of business owners who put a lot of work into, building the business. But if we're talking sometimes with partnerships or with, several business owners, that's exactly it. That's really the last thing they put on the back burner. Or maybe the business started off pretty slowly and then it begins to ramp up, and next thing you know, it's extremely profitable. It's doing quite well. It's worth a lot of money. And the last thing some business owners want is that their spouse to be, all of a sudden an owner of the business. Is that really what was in the original plan? So these buy-sell type of agreements are a great solution that factors in insurance. And at the end of the day, insurance is a tool. It's there and it's meant to certainly cover off specific needs that might arise, and that's where through the dialogue with our clients, we're actually uncovering some of these needs. It may not ever be a thought in someone's mind, but when we bring it to them, it just makes sense.
The other thing, I guess, from a taxation point of view, is that when we're talking about insurance, we look to advise our clients on whether what is the best structure, who should be paying for this insurance, and we're not talking just life insurance. We're talking about disability insurance. We're talking about all sorts of types of protection to protect their assets and their loved ones in case of problems.
Absolutely. So, in the sake of time, because we do want to leave some time for questions and answers, I'll go to the next slide, which is looking at the implementation and revisions. I think it's important to really say, well, what does all this mean? Like, how do I get started? And so this is essentially to pinpoint a few of the important factors. The first is qualitative. Quantitative, I apologize. Quantitative is really sitting down with the documentation. And what I mean by documentation, I'm talking about, reviewing tax returns, financial reports for the corporations, tax returns for the corporations. We're looking at reviewing investment statements. There's several others, pension statements if you have a spouse who may not be part of the business. So there's a long laundry list of documentation that we need in order to be accurate. And it's so clear. I think, Ryan, you were talking about it before. You talked about the whole garbage in, garbage out, theory. And I agree with that. If we come in with a couple of assumptions on certain things and they're not reality, then, the plan is not going to help you.
So what type of, you hammered some of the good quantitative aspects. What kind of questions do you tend to ask your clientele? Yeah. About qualitative types.
This is actually the fun part of it, believe it or not. There's a lot of talk that we've had today, and
which is all fun.
Which is fun to you and I, but I think a few of them might be asleep right now. But who knows? Ultimately, the qualitative side is really, that's the fun part. That's where I want to know. I want to know what's your wish list at the end of the day. What do you want? What does retirement look to you? Picture it in your mind.
Are you saying what turns you on?
Not so much. No, it depends. It depends on the client, I guess. But ultimately, what we're looking at is, what is your bucket list? And so what's nice about the plan is that we can actually put these thoughts, these ideas, these dreams into the plan, and it's fun. It's fun to see. because sometimes we can just test them. We can see how much are these dreams going to cost, and how much is this strategy going to involve.
I think that you guys at Scotia have the great tools to really sort of create those scenarios
Exactly.
that make, so that, and it's not just a matter of changing a few numbers, but it is the ability to change it while the client is sitting there and say, look, this is what you were kind of hoping that you're happening. Look, if we change this scenario, change this by this amount or the aspect, this is what it's going to look like. And, I'm sure you must get a lot of raised eyebrows or maybe some tears, but
yeah, no,
whether that's from you or them, I'm not sure.
But I have to say, I've been in the industry for over 21 years. I've been doing this role for 10 now, and this is my favorite part of the job, bar none. Is really wanting to understand what the bucket list is, what the wish list is, and hoping that through the use of the financial plan, it'll become very clear. And then it leads even further to that sometimes when we talk about estate planning discussions, in terms of, well, if it's not all spent in your lifetime, and some people do want to spend every last cent, before they leave this earth.
Have you actually created any family rifts? Because, especially in today's environment where there's mixed families, a lot of divorces, so people
Absolutely.
are remarried, and of course, people want to take care of their own kids that they've grown up, and then they have these step kids that are involved, and maybe they're not so they don't mind taking care of them a bit, but they really want their especially
exactly.
if you're remarried when you're older.
Yeah, and just like your will, Daryl's will, my will, I mean, they all should look different at the end of the day, because your will is your voice, and it really carries out what you want. There's no right or wrong to this. It's what's right for you at the end of the day.
See, I was thinking that if my will leaves the money to my kids and your will leaves the money to my kids, that's not a bad thing.
Sounds like a plan. Maybe not a good one.
We'll talk later.
So, I mean, you touched on the assumptions a little bit, and I think they play a massive role in the way the numbers come out. And let's face it, I'm an accountant and I love numbers. Inflation, I mean, that hasn't been, let's face it, inflation has not been a large number for many years. And so that plays a big role in, today's dollar is worth more than tomorrow's dollar.
Absolutely. I mean, I've looked at some numbers, and why I look at these 30 to 40 year numbers is that, at the end of the day, if you're retiring, you're hoping to be around for 30 to 40 years at least. So at that point, you kind of have to look at those 30 to 40 year numbers. And believe it or not, even though inflation's hovering at around the 2% range right now, you're talking about...
Have you gone to the grocery store lately?
Well, what's interesting about inflation is that they do exit out a lot of the produce,
the key things that we eat.
Produce, gas for our cars, and so on. Those are all exited out of the calculation. So
that is true.
But you're absolutely right. I mean, the other thought is the rising cost of healthcare going forward as well. I mean, that's growing at a rate that's far exceeds the CPI or the inflationary rate.
We're taking guesses on the tax rates too, right?
Yeah,
and
you're
really
right.
Look at what happened recently. I mean, we are taking some guesses into the future of what things could possibly look like. I mean, that's our
quite right. And that brings us to the next point, this is our last point, which is the revision side. Revision is so key. I'll come back to the team of experts for one moment, but the revision side is really key to this at the end of the day going forward, because, as you say, tax rates may change over time, or personal situation might change as well, or family situation might change. Think back to 10, 15 years ago. Was your situation exactly as it is today? Absolutely not. Nor should your plan be 10 or 15 years old. It's something that you would want to revise, or at least look at on an annual basis. And if everything's good and everything is exactly the same way it should be, then great, keep it going. But review it on an annual basis. It's a document that should be that should grow with you.
And not shelved.
Absolutely. So lastly, just going to touch very briefly on the team of experts. And I always say this, is that it's not a one-man show. It's not
careful.
Or a one-person show,
That's
right?
much better.
At the end of the day, you're talking about, a team of experts. And this is where we draw upon the expertise, whether it be accounting, whether it be on the legal side of things, whether it be on the financial planning side, the insurance side. I can go on and on and on. At the end of the day, it's all about bringing in the right experts to put things into action.
And I know you guys at Scotiabank definitely have those team of experts that deal with the investment side, the insurance side, and here at Welch we have a big group of tax experts that look at this type of these strategies on a daily basis, and
Absolutely.
that's awesome.
Top notch for sure.
So now we're at a huge conclusion here.
We are at the conclusion, and of course, in the fashion of Mythbusters, we have to determine, do we bust it or is it truthful on the myth? So, if I recall, the ultimate myth was, I can retire comfortably with $1 million, right?
We are demystified. It's been demystified.
Yeah, I think it
kind of sounds like we're really demystifiers. Now, I don't want to associate that to dehumidifiers, where they take water out of the air, and we're really taking the mystery out of the air for financial planning. But
absolutely,
he's reaching
absolutely.
there. But
you're reaching. You're far reaching.
I just want to make sure that clear distinctions on there, that we're demystifiers. We're not dehumidifiers.
Yeah,
$1 million myth is busted.
Absolutely.
All right. So there you have it. The $1 million myth is busted. So any other comments you want to make before we go to Q&A?
I'm good.
I'm very good.
Look at that. All right, so let's do it. It's Q&A time, and let's remind you how this works. Throughout the show, some of you have been sending in questions. That's fantastic. Thank you very much. We're going to ask them imminently. Beyond that, though, you can still ask the questions. And to do that, go in your control panel in the question section and type it away. Otherwise, go on social media and make sure you put in #Welch Demystify. Of course, when I say social media, I'm actually saying Twitter. So there you go. Variety of questions here, guys. I guess one final thought before I start asking you. If your question is not asked because we run out of time, or you want to ask it privately, you can email Pierre, you can email Ryan at the addresses you see there. If they've intrigued you with their services, check out their websites to learn more about them. We'll leave this up. You should get on to LinkedIn and follow these guys. There are great connections to have in your network, because they're part of that team of experts, as they were alluding to. All right. First question we got, you were mentioning a will. The individual was asking, is there an age that they should start to have a will?
And the answer is as early as possible. I mean, when anyone has a substantial amount of asset, and that's usually, your primary residence might be one, or other assets that could be part of it. At the end of the day, your will is your voice when you don't have one. And so bottom line is that you want to make sure that your voice is clear, and the only way to do it is to have it in a will. It basically tells everyone who should benefit from this, number one, but who should handle your finances after you're gone.
And what about we're missing a little bit of component there about the fact that we have kids.
Yeah.
And I mean, that's money's one thing, but who's going to take care of the kids?
Good point.
And deal with and the money, and the trustee of the money involved in that.
Yeah. This is going to be another upcoming session that we're going to run as well. I mean, we've got so many of these ideas, and we could spend a whole afternoon on just that one topic. But ultimately, the sooner the better is the short answer to that long-winded response.
We've actually got a follow-on question to that from another participant, and they're asking the question, what do you tell clients who want to do their own will?
Back to the team of experts, but I'll quickly comment on this. Again, the will, I mean, there's a lot of, it's kind of I almost call it. I do a lot of estate work here in the sense, but dealing with people that passed away and that type of estate taxation. And there's a lot of things, and just like in taxation and in legal terms, that you really need to understand. I mean, getting them off the internet might not be the best thing for you. If you have a business, you might not realize that you potentially should have a separate will just dealing with the shares of your business, so that you could potentially avoid probate. And so there are really different issues that come up with trying to do it on your own, and it could really end up with some big problems in the end, which you didn't realize that you've created.
Absolutely. I think more and more as time goes forward, things are becoming more and more complex, whether we like it or not. Government comes in with different rules with regards to estates. It's ever changing. So I guess to answer the question, is it okay to write your own will? If you don't have one, I'd say at the very least it's better than nothing. If you want to handwrite it, sign it, date it, hopefully have it witnessed by someone who isn't one of the beneficiaries, that helps as a starting point. But to Ryan's point is that with the complexity that we're faced with estate and the estate litigation down the road, that is an ever-growing industry right now, it just makes sense to have it professionally prepared for you. The way I see it is that it's an investment, just like you would purchase any other investment, and it's really to save your family, save your estate, time, money, because ultimately doing it on your own, you could be missing some of the very important factors that have to be included into a will to give your executor proper direction and allow for that guardianship for your children if you have, and the proper distribution of the estate.
Pierre, you're giving away. I think that's a great topic that we can demystify and bring one of our fellow lawyers in to demystify whether that's a really good topic that we should be using.
I'll end right there then.
We have another question, and it builds on what you were just saying, Pierre, about how things are constantly changing. Changing complexities, changing life situations, kids, no kids, extended kids, whatever it might be. So the individual wants to know, how often should I revise my financial plan?
I think at least on an annual basis. And does it need to be changed? Possibly not. But ultimately, it's an opportunity for you to sit down and really gauge the success of the plan itself. What I mean by that is, I alluded at the beginning to say that what we can do from an investment management side of things is we can work backwards from a financial plan and determine what rate of return do we need to achieve at a minimum so that you will meet your goals. And so this is where you kind of hold your investment advisor basically to the fire and say, hey, this is what I need to achieve at a minimum. Did we do it this year? And if not, then we need to look at the plan to see, is this just a short blip? Is this an anomaly?
Good question here. I imagine it's one you hear a lot. This individual claims they're having doubts about their current financial advisor, and some of the recent investment choices recommended haven't panned out for them, which kind of brings it back to your point about the volatility in the market in the last few years and people talking to you about that. So it's a very simple question. If I'm having doubts about my planning, my financial advisor, what do you suggest?
Again, I guess Pierre kind of touched on it a bit when we're talking about situations where the markets are very volatile. So sometimes you got to take a deep breath, because I've known individuals that, after the last financial crunch, they kind of sold out of the markets, and they did not sort of stay in during the recovery of the market. So, I always, sometimes you need to take a deep breath, and sometimes, you do need to look, to another source to help you out. And I think Scotiabank has a great tagline for that.
That's right. Our famous second opinion. I mean, at the end of the day, you're looking at if there's ever a doubt, if there's ever a question mark in your mind, as were these the right choices that should have been made? I'd ask yourself this: do you have a plan in place? And I'm not just talking about a one-page projection that maybe your financial advisor gave you to say, this is how much you're starting with and this is what you're going to have in 20, 25 years. That's a projection. I'm talking about a comprehensive financial plan and what we talked about today. That's your starting point. And then once we've ascertained what it all means to you and what rate of return that you need to achieve, then we dissect the portfolio, and then we decide, is this a right fit for you? And this should be, again, an annual process that you go through, because your portfolio should not look the same as it did 5 or 10 years ago. And so it shouldn't look it should be looking different as time goes on as well. It all is reflective of where you are, in life, and what life events we expect to have happen to you.
It was interesting. I was talking to an individual the other day, and they were talking about their investments, and they have multiple financial planners, multiple setups, and they were saying, the one planner, the portfolio mix hadn't performed very well in the last several years. The other planner has stayed even, net zero. So this woman was interesting. She was saying, I recognize the markets have been a bit turbulent. So I reached out to the planner who had done net zero simply to say to him, I know you've not made me money, but you've kept me at zero, and I want you to know I appreciate it. And she says to me, she goes, how often do financial planners actually get a thank you? I imagine they get a lot of people complaining about them. How often do they get a thank you? And so I thought that was rather interesting.
Well, that's a huge, that's really a key point, Daryl. And the word that we use in the business is capital preservation. And keeping your capital, especially when the markets are very volatile, is crucial, because it's easier, when your money is at 100%, it's easier to make money at 100%. If you have a portfolio at $100,000 and you make 10%, well, versus you have a portfolio of $50,000 and you make 10%, you've made less cash because there's less capital there to make you the overall cash flow. Amount.
Quite right.
So we have a number of questions that are outstanding. So I want to apologize. We're not going to get to them all. We've run out of time. All right. But I do want to respect the calendar time we've taken on your diary. So this will be the last question we ask today. But we will follow up with you afterwards if we didn't get to your question. This was a really good question in the sense of I'm sure many people online today and listening on demand as well would relate to this. The individual's planning to sell their business within the next 5 years. So they're trying to, you talk about, the whole, financial plan. How do I determine the value of my business and get it ready for sale? And I guess the second part of there, and, what does that contribute to my financial plan? Is that part of my financial plan or not? So 5 years, sell the business. How do they determine the value of the business? How do they get ready for sale? What does that mean? Last question. Short and concise, guys.
Short and concise. Okay. Thanks a lot, Daryl.
Good luck.
I gave you 3 questions in one. That's right. Go for it.
So, that's a huge part of the financial plan when we're sitting down and discussing what their plans for the future are and various goals. I think that knowing that in advance is crucial to determine what we do next. We have a group here at Welch Consulting that really focuses on how to get your business ready for sale. And when we're looking at, they're looking at different matrix, different crucial and key components of your business, and looking at each individual component to determine whether or not it's operating at its full capacity. A lot of times business owners tend to slide in their older age when they're about to retire, and of course now the business valuation go down. So we try to get in there to sort of pump some life back into the business, because you don't want your business to be dropping down, your sales dropping as you're trying to potentially turn around and sell this. So knowing that you've talked to somebody, you've thought about it, you're looking to sell, you can make a lot of decisions that are going to be very beneficial. Beneficial meaning that's money in your pocket. You're going to be looking at ways of increasing, improving sales, so that when the valuation's done. So when we're talking about how do we determine the value, well, the marketplace, we have an M&A practice here through the Welch Consulting Group that will look outside the walls of your industry, outside of Ottawa, look out to see, what is the interest in your business. And there's always business valuators out there that can put a sort of, give you an estimate of what the dollar value is on your business, so you kind of get an idea. But I think the key is with our expertise in house here, they can tell you where your value gaps are. Where are you missing? Are you missing that key employee that will to help improve your business? Is your financial group running as efficiently as possible? So they really look at value gaps. So they'll peg your business at a certain value, Daryl, and then they go in there and we help them through as accountants to help them improve their business, so that when they're really ready to sell, they're going to get the most bang for their buck.
All right. So with that, we are at the end of our inaugural episode of Demystifying for Business Owners. If you like that, we're doing it again, January 14th at 2 p.m., where it's all about demystifying protection planning. Because you were part of today's session, you'll definitely get an invite via email to join us in the next one. And again, if you like this and you want to share this with a spouse, a coworker, what have you, in about a week's time, you'll have an email with an on-demand playback you can get of today's session. I want to thank our two hosts, Pierre, Ryan. Great job. Well done for that. I guess we would call this a pilot, right? This is a pilot. All right.
Sure, why not?
All right. And I see that Ryan on this picture is Adam and Pierre is Jamie. So, Pierre, you're the nerdy engineering one, and Ryan, you're the techno geek clumsy one. So we're clear on that.
That's pretty much
much it.
up.
I found my new Halloween costume.
There we go. All right, folks, we're done. We're out of here. We are so glad you took time out of your schedule to join us today as part of the Demystifying for Business Owners series. And if you like today's show, there's more. Just go to welchllp.com, and under the resources, you'll see a whole whack of webinars and content that'll help you with your day-to-day decisions. Don't forget, this is a two-part tandem, Welch LLP, Scotia Bank, Pierre, Ryan. Check them out. That's it, folks. We're done. Take care. Bye-bye.